Hello friends, welcome to my YouTube channel Simply Stocks, and today I am going to talk about Sundaram Fasteners. Will the up move continue in the stock or will it correct? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I am not in favor or against any company that I talk about. Before I talk about Sundaram Fasteners, his small request is kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. Now, if you pay $100 upfront, you get 1 year access by paying for 10 months. Now about the company, Sundaram Fastener was established in 1962 and they are into auto components manufacturing. Expertise lies in the making of fasteners and spare parts and boast of marquee clients. Spread across India and some countries abroad as well, they also produce rear view mirrors. Their clients include Suzuki, Honda, Yamaha, Bajaj and LML. In terms of numbers, these are June quarter numbers this time around that have come out. So basically, market cap of around 17,000 crores at the moment. Sales were around 1410 crores. So these are June FY23 numbers, if I may say it. So sales of 1410 crores was up by around 27-28%. A profit of 138 crores versus a loss of 120 crores. So it was a turnaround thing. Interest burden is reducing in the stock. There's decent dividend yield at the moment, and sales and profits are consistently increasing. Yes, it had a difficult time during the pandemic for a couple of years, but things are now coming back into shape. A decent combined promoter and institutional holding is also there, which augurs well for the stock. If you look at the performance, stock is in a strong uptrend. It had fallen 50% and more during the pandemic, but the last 1 year has seen sharp recovery in the stock, and now auto ancillaries are coming back into form and many of the stocks are rising. Stock has more than tripled from the March 2020 lows around 850, 860 at the moment, and business is picking up as world opens up and India opens up completely. Hopefully during the festive season and over this next 6 months, business should pick up even more. Results are strong and set to get better in future as we go along. So why the slowdown in the industry that has taken place? Auto industry has been under stress for the last 5 years. It's not been a phenomena for 2-3 years, and the biggest attack has came in the form of you can say the pandemic, and then everything catapulted down. But commercial vehicle segment has been most hit, and most of their fasteners are being sold to CV, you can say CV companies. Economic slowdown hurt infra to the core, and a projection of further stress in the next 2 years is expected, and that was the reason why over the last 24 months the stock fell, and now the recovery is taking place. So by 2018-2019 it was thought that there would be further stress on the industry, and especially from 2020 onwards because of the pandemic it was expected that many of the companies may just shut down altogether. But now things are coming back into shape, and now sector is coming back into favor, and we are seeing a lot of auto ancillaries being bought from the lows. In terms of technical, there's major long-term support around the 670 levels if somebody wants to buy from a long-term perspective. The short-term support is around 800 on dips to 800 can be bought. 900, 920 is the resistance zones, and once it crosses 950 levels, then it will be in an uptrend. I think it may have seen the lows, and over the next 1 to 2 years should perform better. Can be traded with a 10% stop loss as well, with a 30% upside from here. So in my opinion, if you have it, then hold on to the stock. You have seen the worst of the cycle go around. I think the next 2-3 years could be good for the auto ancillaries space. If you have not bought, then do not get into it. Probably you can look at consumer centric stocks, other kind of stocks. But cycle is turning around, and I think in the next 2 quarters you will see things really pick up. So I think you can buy top players in autos, and you can buy top players in the auto ancillary space. It's a good 2-3 year play. I don't think an immediate reward reward is possible in the stock, so one can accumulate in this region whatever I have talked about in technicals, and probably hold on to the stock from a 2 to 3 year perspective. So this was my video on Sundaram Fasteners. Please like and subscribe my channel, hit the bell icon so you get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.